Hello and welcome. Today's update is very important for millions of seniors, retirees, and people with disabilities across the United States, especially if you receive Social Security Retirement, SSI or SSDI. We are going to talk about what is really happening with January payments, what the increase in benefits actually means for your monthly check, and how these changes could affect your budget in the weeks ahead. Many people are hearing big numbers and strong headlines, but what matters most is how much money actually reaches your bank account and what you should expect going forward. So, please stay with me until the end, because this information can help you plan, avoid confusion, and protect your income. Let's begin by talking about why January is always such an important month for Social Security, SSI, and SSDI recipients. January is when annual benefit increases usually begin, and it is also when payment schedules, Medicare deductions, and other adjustments can change. For many seniors, this is the month when they first feel the impact of new cost of living adjustments and policy updates. That is why so many people are checking their bank accounts more closely in January and trying to understand why their payment may look different than it did in December. Now, many of you have heard about a large percentage increase being discussed, including numbers like a 9% increase. It is very important to understand what this type of increase really means. For instance, when you look at how these adjustments work, if someone is currently receiving a lower monthly benefit, the actual dollar increase they see is going to be naturally smaller, even if the percentage rate itself sounds quite high on paper. On the other hand, people who have had much higher lifetime earnings and are already receiving higher Social Security benefits are going to see a much larger increase in terms of actual dollars added to their check. This is the core reason why two different people can both be told they are receiving the exact same percentage increase, yet they end up with very different new payment amounts when they check their bank statements. For those who are Social Security retirement beneficiaries, this annual increase is added directly to your base benefit amount. What that means for your wallet is that your new monthly payment effectively becomes your new standard amount for the entire year moving forward. This change isn't just something you will see for the month of January. It is the set amount for every single month of the year, unless other specific legal or personal changes apply to your case. Now, when we look at SSI recipients, the situation can often be a little more complicated to navigate because SSI is strictly a needs-based program. That means your total income, your current living arrangements, and any other outside support you might be receiving can directly affect what your final payment amount looks like each month. Let's really begin by diving into why January is always considered such an incredibly important month for Social Security, SSI, and SSDI recipients across the country. January is the time when these annual benefit increases usually begin to take effect. But beyond just the raise, it is also the time when payment schedules can shift, Medicare deductions are updated, and various other administrative adjustments can change the final number you see. For a large majority of seniors, this is the specific month when they first truly feel the impact of the new cost of living adjustments and any recent policy updates that have been passed. That is exactly why so many people are checking their bank accounts much more closely in January and trying to understand why their payment might look different than it did back in December. Even with an overall increase being announced, some individuals might not actually see the full benefit in their take-home pay if other external factors reduce their overall eligibility or increase their deductions. For SSDI recipients, these increases usually function more like retirement benefits, where the cost of living adjustment is added directly to your regular monthly payment. Another vital thing to keep in mind and truly understand is that benefit increases do not always mean you are going to feel richer or have more disposable income. Many seniors today are facing significantly higher costs for everyday essentials like food, rent, utilities, insurance, and medical care. So while your check may be going up by a certain amount, your actual cost of living may also be rising at the exact same time, or even faster. This is why it is so critically important to look at the full financial picture of your life, not just the increase itself in isolation. Planning your monthly budget with extreme care becomes even more important when prices remain high and unexpected bills can appear out of nowhere. Now, we have to talk about stimulus payments because many people are still holding out hope or hearing various rumors about new federal stimulus checks being released. As of right now, it is important to be clear There is no confirmed nationwide stimulus program that works like the earlier pandemic payments we all remember. However, it is true that some specific states and local community programs may offer targeted assistance, one-time rebates, or tax credits for seniors and low-income residents. These programs are not automatic for everyone and usually require you to prove eligibility based on your specific income level, your age, or your household situation. This means you really should not rely on rumors you see on social media or claims about guaranteed stimulus money for everyone. You should always be extremely cautious of anyone promising you fast cash in exchange for your personal or banking information. What is much more reliable and beneficial for most seniors is gaining a deep understanding of the regular benefit systems that already exist and are active. Social Security, SSI, and SSDI remain the primary source of income for millions of Americans. That is why understanding how these specific programs change each year is far more important for your long-term security than chasing uncertain or fake stimulus news. Small, steady, and reliable increases can be much more valuable in the long run than a one-time payment that doesn't solve your ongoing financial needs. Let's also talk about the Medicare factor because this heavily affects how much money you actually get to keep from your Social Security payment. Many people often forget that Medicare Part B premiums are usually deducted directly from your Social Security checks before you even see the money. If Medicare costs increase for the new year, that can significantly reduce the net benefit increase you actually see in your bank account. On the flip side, if those premiums remain stable or happen to decrease, you may actually feel more of that benefit increase in your daily life. This is the main reason why some people feel a sense of disappointment when they hear about a benefit increase in the news, but then do not see as much extra money in their deposit as they were expecting. Another issue that frequently affects January payments is the timing of the deposits. Social Security does not pay every single beneficiary on the same day of the month. Your specific payment dates depend on your birth date and the specific type of benefit you are receiving. SSI is usually paid out at the very beginning of the month, while Social Security, retirement, and SSDI payments are distributed on different Wednesdays depending on where your birthday falls in the month. This means some people may receive their increased amount much earlier in the month, while others may have to wait a bit longer. Understanding your specific payment schedule can help reduce a lot of unnecessary anxiety and prevent you from worrying when your deposit doesn't arrive at the same time as a friend's or a family member's payment. It is also vital to stay on high alert for scams during this time of the year. Whenever benefit increases or stimulus rumors are making headlines, scammers become much more active and aggressive. They may send you phone calls, text messages, or emails claiming that you need to confirm your personal information to receive your higher payments. You must remember that government agencies do not contact people in this manner to demand personal or banking information over the phone or via text. If someone is putting pressure on you, threatening you with a loss of benefits, or promising you extra money in exchange for your details, that is a serious warning sign of a scam. Protecting your personal information is just as important as protecting your monthly income. Now let's talk about how seniors can truly make the most of their benefits during these times of rising costs. One of the most important steps you can take is reviewing your monthly expenses with a very critical eye. Knowing exactly where every single dollar goes can help you find small areas for savings that really add up over a long period. Even small adjustments in your daily spending habits can make a huge difference when you are living on a fixed income. It is also extremely helpful to explore various community programs that offer support with things like food assistance, utility bills, transportation, or even specific medical services. Many seniors actually qualify for assistance they are not currently using simply because they are not aware that these programs even exist. Another helpful and proactive step is making sure your information with the Social Security Administration is always completely up to date. Any changes in your home address, your banking information, or even your marital status can affect your payments and the way the agency communicates with you. Keeping your records accurate helps you avoid unnecessary delays, payment errors, or missing important notices. It also significantly reduces the risk of fraud or identity theft problems. Taking care of these small administrative details may not feel urgent, but they play a massive role in keeping your benefits stable and secure. For those of you who are still working part-time while receiving your benefits, income limits are another very important topic to stay on top of. Earning too much money can temporarily reduce your Social Security payments if you are currently below the full retirement age. Understanding these specific rules can help you avoid any nasty surprises and allow you to plan your work hours much more wisely. Many seniors enjoy staying active and earning a bit of extra money, but it is critical to balance that work with how your benefits are calculated by the government. As we move through the month of January and into the rest of the year, the most important thing is staying well-informed and staying realistic about your situation. While benefit increases are certainly helpful, they are not always a complete or total solution to the financial pressure caused by inflation. Careful planning, making safe decisions, and relying on high-quality, reliable information are your best tools for success. You truly deserve stability, dignity, and peace of mind after a lifetime of hard work and contribution to society. Understanding your benefits inside and out is one of the best ways to protect that future for yourself. Now let's continue by discussing how these benefit changes can affect different groups of people in very different ways. Because not every senior or person living with a disability experiences these increases in the same way. Someone who has worked for many decades and receives a higher Social Security retirement benefit will naturally see a larger dollar increase than someone who receives a smaller monthly payment. This does not necessarily mean the system is unfair, but it does mean that your specific budgeting strategies may need to be different depending on your unique financial situation. For people receiving SSI, even a small increase can matter a great deal for their quality of life. But that payment may also be affected by housing support, family assistance, or state-level supplements that can change the final amount that is deposited each month. It is also important to maintain the understanding that benefit increases do not automatically solve every long-term financial challenge you might face. Many seniors are understandably concerned about how long their personal savings will last, especially with the rising costs of health care and the very real possibility of needing long-term care in the future. While Social Security is designed to provide a strong foundation of income, it was never meant to cover every single expense on its own. This is why using your benefits wisely and planning ahead remains extremely important, even during the years when payments increase. Another topic that many people ask about frequently is taxes. Some Social Security recipients are actually surprised to learn that a portion of their benefits may be taxable, depending on what their total combined income looks like. If you have other sources of income from part-time work, pensions, or various investments, you may actually owe taxes on a portion of your Social Security benefits. This doesn't apply to every single person, but it is absolutely something you need to keep in mind when you are budgeting and planning for the year. Understanding this well ahead of time can help you prevent a lot of stress later on when tax season arrives. Healthcare remains another major concern for seniors and people with disabilities alike. Medicare provides essential and life-saving coverage, but we all know it does not cover every single thing. Copays, deductibles, prescription drug costs, and other services not fully covered by insurance can still create a massive amount of financial pressure. This is why reviewing your healthcare coverage every single year and understanding all your available options can make such a big difference in your bottom line. Even making small changes in your specific plans or your prescription choices can sometimes reduce your monthly out-of-pocket costs, which effectively helps your benefit increase go much further. Many seniors also worry about potential future changes to Social Security and Medicare as a whole. While discussions about long-term government funding often appear in the news and can sound scary, it is important to remember that benefits for current recipients are not suddenly disappearing. These programs remain a top priority for the country, because millions of Americans depend on them for their survival. Still, staying informed helps you prepare both mentally and financially, so you aren't caught off guard by policy changes or adjustments in the future. Another important point to always remember is that not all help comes in the form of a direct cash payment. There are many programs available that provide indirect financial support, such as help with your heating and energy bills, food assistance programs like SNAP, transportation services for seniors, and assistance with various medical costs. These programs can significantly reduce your monthly expenses, which is just as helpful as receiving more money in your check. Many seniors qualify for these programs, but never actually apply because they assume they don't qualify, or they simply don't know the programs exist in their area. Learning about your local and state-level programs can sometimes provide meaningful relief without ever changing your Social Security check amount. Let's also talk about family support, because many seniors today find themselves helping their adult children or their grandchildren while also trying to manage their own rising expenses. While helping your family can feel like an important and emotionally rewarding thing to do, it can also put a serious strain on your own budget if you are not being careful. Setting clear limits and protecting your own financial stability is not a selfish act. It is a necessary one. Your income must be able to support your own basic needs first and foremost, especially when healthcare and living costs continue to rise every year. Another major issue that affects your overall financial security is debt. High credit card balances, unpaid medical bills, and other forms of debt can very quickly consume any extra money you get from your annual benefit increases. Paying down high-interest debt whenever you possibly can will improve your monthly cash flow and significantly reduce your stress levels. Even making small, consistent payments can slowly improve your financial position over time and give you much more breathing room each month. Now let's focus again on those January payments and what you should be watching for. If your payment amount seems incorrect when it arrives, it is important not to panic, but it is also important not to ignore the situation. Payment errors can and do happen, and delays can occur for many different reasons. Keeping a clear record of your payment history and knowing exactly what your expected amount should be can help you identify any problems very early on. Acting quickly when something seems wrong can prevent long delays and much larger problems down the road. It is also very helpful to talk with trusted family members about your financial situation. Having someone you trust who understands your income, your expenses, and your concerns can make it much easier to handle problems if they ever arise. Financial stress can be a very heavy burden to carry all by yourself, and support from people you trust can make difficult situations much easier to manage. As we look ahead to the future, it is clear that staying informed is one of the strongest protections you have as a senior. Understanding exactly how Social Security, SSI, and SSDI work helps you avoid false information and fear-based rumors that spread online. It also empowers you to make much smarter decisions about your spending, your savings, and when to seek out extra assistance. Reliable knowledge allows you to feel more confident and far less anxious about your financial future. It is also important to remember that you deserve respect and you deserve stability. These benefits are not gifts or handouts. They are part of a system that you paid into through years of work or qualified for through your life circumstances. Receiving them with dignity and using them wisely is a key part of taking care of yourself and your future happiness. As we finish today's update, please remember the key points we have discussed. January payments often bring changes, and while benefit increases can help, they must be understood clearly to avoid any confusion. The actual size of your increase depends on your current benefit amount and your individual life situation. Rising living costs can reduce the impact of these increases, which makes careful and honest budgeting more important than it has ever been before. Scams always increase when benefit news spreads, so protecting your personal and banking information is critical. And finally, remember that many support programs exist that can reduce your expenses even if they do not directly increase your monthly check. Staying informed, planning your finances carefully, and seeking help when you need it are powerful steps toward protecting your long-term financial well-being. Your future matters, and your financial security is worth your time and attention. Even taking small actions today can make a very meaningful difference in your life over time. Thank you for spending this time learning about these important updates and how they affect you. Keep watching for reliable information and never stop asking questions when something is unclear to you. And most importantly, please take good care of yourself. You have worked hard throughout your entire life and you truly deserve stability, respect, and total peace of mind as you move forward into this new,